This is the US dollar, the DXY, for the past couple of days. Today is Wednesday, 18th of December. And one thing that we can see is that the market has been ranging for a bit. So you would always ask yourself, why does this normally happen? Most times it happens when a big news is about to be released. And we might be asking ourselves, what news is about to be released? And then we check the calendar under Forex Factory or any website that has to do with news. And if you look, as we said, Wednesday, look closely for the USD later by 8 p.m. Well, you could say 8 p.m. West African time, which should be 7 p.m. UK time. We have for the US dollar, we have the FOMC. Yes, indeed, the Federal Open Market Committee statement, and this is big. Now, what has it that they're going to cut rates? So we should be expecting something, well, if not 4.50%, probably lower. And if it is lower, that means that the US dollar most likely will be weak, and we should expect the dollar to tank to fall. So if we're expecting the dollar to fall and we go back to the chart, so the DXY, you'll notice that from this range, we have these areas here, very important, which looking to the left, resist support, support, made a mess over here, made a mess over here, and a bit of resistance here. Didn't quite get there, but don't forget it's an area. We also have this key area here, this highs over here, acting as resistance. And you can see the market is in the middle. As it's in the middle, you could simply do something. You could look at this as a triangle, if you will, right? When you're using your trend lines, of course, you just need 2 points for your trend lines, and you could have something in this manner. As you have this in this manner, this simply means that price is about to break out, and we're expecting a breakout sooner or later. This is the hourly time frame. And the news we're expecting is probably about 12 hours from now. So we have some 12 candles that should still form. So do not be surprised if we still have some sideways movement here until the news breaks either to the downside or to the upside. Don't forget we said they might probably cut the rate and then the dollar probably should tank and then go to the downside and test 106.68 area of support and probably bounce or break. Only time will tell. But not withstanding, based on this DXO that we've talked about with the news coming out, the FOMC statement, if we cross over to our fiber, our Euro USD, we're going to see something rather unique. Remember, we said that we're expecting the DXY to tank, and then that means that the Euro USD should appreciate as they tend to move in opposite directions based on the positioning of the USD. You can see that for a while now, in as much as we've had a sideways market, it has been bouncing over here. We talked about this in the previous video, and this we were actually looking for 1.05 to hold somewhere around here yesterday, but you can see it did not hold. Look at all the red candles, the bearish candles that we had up to this point here, right? So this here is an area that seems to be well protected, which happens to be a demand zone, a demand zone. And you could also check the 4 hours time frame and you see it clearer as well. So if they cut rates and the DXY should get weak and tank, then we should expect this Euro USD to appreciate. And who knows, here happens to be the highs of this month, right? But the highs of this week happens to be right over here. So if we put a horizontal line here, you'll notice that looking to the left-hand side, here, resistance, looking to the left-hand side, resistance, 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 and then made a bit of resistance here as well after breaking and then pull back here. So this here is a key area of interest if the market is going to appreciate. So we might as well get a reaction here, or based on the FOMC statement, it might as well break through. But then, as we always say as well, the market could go either way. So it's always good for you to look at what you want to do as a buyer and probably what the other person might probably be thinking of as a seller. And if you want to sell, what is the other person thinking of as a buyer? Where does he want to buy? Where does she want to buy? Where do you want to sell? And so on. It's all about asking questions, using the charts and the information here, and of course the fundamentals to give you that directional bias in the market. So we're still bullish. So far, so good. We're still bullish on this Euro USD, and this level has been holding over here, as you can see. You can as well cross over to a lower time frame to look for a discounted entry based on today. Here is today, Wednesday, and this is the vertical line separating Wednesday. Sorry, my hand is not that straight, but this is the vertical line here. As you can see, 18th all the way up. So the price action for today is still pretty much fresh, just about 7 hours thereabout into it. And you could always get a little pullback inside this information for today and then use that as your entry to push higher, right? I'm going to show you how you could probably do that just in case you are asking. And in order for us to do that, we're going to go over to the 5 minutes time frame. Oops, that's the 5 months, sorry. We're going to go over to the 5 minutes time frame. Come on, let's just do it this way. 5 minutes time frame, where are you? Okay, good. So here's the 5 minutes time frame. And of course, we said the market opened on the 18th from here. And from this point was where it opened, and this is where it is now at the moment. One thing I could easily do is put up Fibonacci from the lows over here of today to where it is presently. And if you had done that earlier over here, you most likely would have gotten an entry, probably here. Or if you want, wait for it. Hopefully it pulled back again to this point here or here. Because looking at all of these lows, you can easily say that this here is a demand on the lower time frame. And of course, if you get your entry here, which happens to confluence with 61.8 Fibonacci retracement, you have probably roughly 10 pips stop loss. I would say 10 pips stop loss on the 5 minutes time frame. So you have a 10 pip stop loss on the 5 minutes time frame, and then after you get your entry, you hold your position, and then you switch back. Oops, let's delete this one, and then you switch back. Don't forget, we're thinking of getting an entry somewhere here, so I'll put this horizontal line here. And then we switch back to probably the 1 hour time frame. Then we'll see, okay, we get our entry here at about 1.0496. Don't forget that 1.05. I can just adjust it, move it higher to about 1.05 or leave it where we're expecting, which is approximately still 1.05 psychological round number. So if you have a pullback here and then it runs to these highs here, that's the quick 33 pips for like a maximum of about 10 pips stop loss. That's already 1 to 3 reward. Peradventure, if it breaks out of this 1.0533 area of resistance and pushes higher, of course, that's going to be more than 1 to 3 reward, which is going to be a fantastic trade. So let's pay attention. If you're looking for a discounted entry, as we showed you on the 5 minutes time frame, even using Fibonacci from the lows to the highs of today's price action, looking for a pullback to the Fibonacci retracement level with demand zone as confluence, get your entry there and then watch it play out. So we are definitely, based on our analysis, we are definitely long biased, and we're going to see how the FOMC and also before the FOMC, how price action turns out. So if you found this video helpful, you know what to do. Give it a thumbs up. If you have any questions, use the comment section below. You're new to the channel, hit the subscribe button, turn on the notification bell so that once we drop videos like this, timely videos, you pay attention to them and then try to take advantage. Okay, guys, thank you, and then see you same time next time. Cheers.